All right, let's do this. Let's do this. Let's do this. Market is open. Market is open. Let's go. Shit, vad långt efter den där.
Alltså vad för swing trades.
Exakt. All right, guys. We were looking at GBP USD yesterday. That was unfortunately fail, a stop loss. This was the trade yesterday. This is what we do. Every time we call a trade, no matter if it wins or fails, we're going to look back at it and see what happened. You know, how can we do it better? So when we entered the trade, it was about this area. We had some confirmations and it went south after that. It went south. And this is where we're at right now. On the 50-minute time frame, we see the market is retesting the 20-day and the 200-day moving average as resistance. Broke through here, broke through the support here, and it's retesting it now as resistance right here. And we'll see if it breaks through. Market has just opened, so let's see how the market reacts first. Yeah, let's pull out some Fibonacci and see what kind of levels we got here. Go to the 4-hourly time frame. You know what, guys? Pardon me. First, let's look at the bigger picture so we all got a sense of what has happened and where we're going. What is the Dixie doing? Dixie is the dollar cost. The dollar index. The dollar index shows the price of the dollar. It's basically a bunch of different currencies bunched together. So I think it's Japanese yen, Swiss francs, it's the UK sterling, Swedish krona, and some more. Right now, it looks like the dollar. Oh no, I don't know. It's ranging. It's ranging right now. It's not making any real move, but this is not the US Open, this is the UK Open, so we won't see much happening with the dollar right now. We're looking at the GBP. Let's go back to it. Let's get back to it. All right, so let's remove this. We don't need that anymore. On the daily time frame, what we see for GBP USD, GU, what we see is this. First, let's look at the big picture. Daily time frame, boom. We pull Fibonacci from the bottom of the swing to the top. And what we see is that we came down from this top and found support at the 23.6 retracement. Now, the thing is with the 23.6 retracement that it's very weak actually. So, and this means also that we got a lot of bullish momentum. So, because normally what happens is we see a retrace at least all the way to the 38.2% retracement. It didn't happen. So when we get this kind of shallow retracements, and most often it means we got a lot of bullish momentum upwards. So this is what we're looking at now. Removing this Fibonacci, and as you guys see, it conflues perfectly with the support that we had all the way from here. Support was trying to break through, but didn't make it. We came back up through. We tested as support, broke through. We tested as resistance, support, and support. So that line is very strong. And now let's look at the smaller time frame to see what's going on. We're going to the 4-hourly time frame. And let's look at this swing first. We got this swing here. So from this top to this bottom. And what we didn't see, I'm gonna start doing like this. I'm gonna start putting the 0 and the 1 as well, so that you guys see clearly where it starts and where it ends. All right, so now you see it's from this top to this bottom. The 100% is always where you start to pull the Fibonacci, and the 0% is the top or the end of the swing that you're pulling Fibonacci on. So what we see here is, let's pull up the highlighter again. What we see is that market has been ranging between the tops all the way from here, December. That's been ranging between those tops, and from this swing has been ranging between the 28.6 retracement and the 100% retracement. So it has been ranging between the 28.6 retracement and the 100% retracement. Now, that's the range. So basically what I'm going to do is I'm going to draw a box here. We want to box this area in. Something like that. Something like that, yeah. This is the area within we've been ranging. We paint this a little bit. And this can be fully transparent like that. Okay. Now let's just bring out the volume quick and see what the volume tells us. This is a volume profile. Very good to use. Why? Because it shows you where the most of the volume is. So I don't know if you see it on your guys' screen, but you got the volume continues here actually. But what you see highlighted here is the zone where 70% of the volume is. So this is the areas where most of the volume is. And of course, where the spikes are, that's where you see the most volume. So you see the most volume right now in the sweet spot zone here, which is typical. That's what we call it, the sweet spot. There's a lot of volume there. So you see here, a lot of volume. And then you see a lot of volume inside the demand zone, which is also typical. So you see a lot of volume here, right? And where is this? This is the demand zone. So what's happening right now is that the market is retesting the top side of the volume. So it's retesting the top side of the volume as support. And in the meantime, on the 4-hourly time frame, what it does is it tests the 20-day moving average, the 20-day EMA that we see here. And in the meantime, what it does, it tests also that 88.6 Fibonacci retracement that I showed you guys from this swing here. So this whole retracement, now it's retesting it, that zone from the top. So it means it retested as support, all right? So now when we know that, it means we have a lot of strength actually here on top. We have a lot of strength here, and it should take a lot, for example, the US dollar to start pumping or something for us to lose that support. Otherwise, the way is up. The way we're going is up. Now, how far up? Well, until now, the only thing we can see is that we would go here to the top of this zone, to this box that I was talking about, where the market is ranging. Even here, you see the volume is perfectly confluent with the top of that box. So what I do now is I see a trade. I'm going to go on the 50-minute time frame to see what's going on. So I see a trade here. Now you guys see what I did. We were on a big time frame to see what's going on with the market and in what direction the market is going. Went lower, got confirmation of the support and everything here, and we went lower to the hourly time frame, and now we're starting to go to the time frame for entry. Now, what we're looking for to enter the market, first and foremost, you don't want to see this. We want to enter a buy. What we're getting here is sell confirmations. How is the sell confirmations? Yeah, because we on the underside of the 20-day and the 200-day moving average on the 50-minute time frame. So that means, and we also and we also broke below this important support that we have here from the 88.6 Fibonacci retracement from the big swing that I showed you guys. So for this buy here to confirm, for this buy opportunity that we see here to confirm, we need to see the market first break above here, break above these two lines here. Okay, when we see that, we can enter. So basically the entry would be somewhere around here, like a little bit higher up, somewhere around here. Right now, you see the market is going down. So we let it go down, we let it play out, we let it play out and see what happens. Probably it's the dollar pumping. I don't know. No, nothing is happening with the dollar. So the market is turning down right now. Let's see what happens with that. With that said, while we let the market play out a little bit here, we go to the Monero. We go to Monero. Let's see what Monero tells us. So let's see here. Let's refresh this page. I'll take a sip of coffee. Okay, let's dive into Monero. First, let's see if Monero got some GBP USD. Here we got some GBP USD. Let's see what Monero tells us on GBP USD. So you see, guys, on the 1 hour time frame, it tells us that it sees a sell because it has found a triangle pattern. To be honest with you guys, I'm not very fond of triangle patterns, so I'm gonna let this one be. I don't see it as strong as confirmation. Let's see what more we got, because we got more GBP USD. Only problem is it's not completed. It's on a daily time frame. But let's look at that, because it's a bat pattern, which I consider much stronger than a triangle pattern. Triangle pattern can be good sometimes. They tend to work very well with, for example, Bitcoin, crypto. But in Forex, I don't know. So according to the daily, looking at the daily time frame for GBP/USD, what we see is that the market needs to come up to this entry level here, which is at 1.297. And now to complete this bat pattern that we see here, this is the bat pattern. Looks like a bat, right? Almost. So, and this is for you guys that don't know, this is our harmonic pattern. This is an harmonic bat pattern. We have different harmonic patterns: Gartley, crab, butterfly, and so on. This is a bat pattern, and we're looking for the for market to come to the entry at 1.2975. And what would that put us on this chart? 1.2975 would put us at about, damn, that's high up. It's very high up. So that puts us that will put us at this zone, 129.75. That's right here. That's the entry for the analyses on the daily time frame. So we got a long way to climb until we see that sell from there. Okay. That's a long as climb. Like you want to go on a weekly time frame to get that straight. All right, guys, I'm dropping GBP/USD for now because it's acting crazy. See this drop here? So it's testing support at this level. See this wicks down here all the way. It's testing all of this as support right now. Sit all the way down here. So this is what it does. It's testing all of this as support right now. We will see if that holds. Yeah, it's trying to push down. We will see. It's on a 5-minute time frame. This buy opportunity right now, I don't see it. So we leave it like that. Who knows? We might get a sell here. Right now, the bias is up. Let's look at something else. Let's look at if Manara got some more trades for us, because I know some of you guys prefer Forex before gold and Bitcoin or crypto. So let's look at some more Forex. Oh, and by the way, let's look at the status for our Euro USD trade. That is not activated yet. It came very close, guys. You see this? You see how close it came yesterday? So hopefully we'll see another push. Like this is the entry zone that we have. Almost came there. So now we want to see a last push into the entry zone. And then we take the sell. All right. With that said, let's look at Manara. So let's go from beginning. USD, US 30, that's Dow Jones. What do we got there? Triangle pattern. Let's look at NZJPY. Some exotics. This one already went to stop loss actually. GBP/USD, we already looked at this one. Let's go to GBP/CHF. the GBP Schweiz francs. That one has a long way to go. Euro Swedish krona. Well, I don't know what Swedish krona has to give. This one already gone. Euro AUD. All right, this one looks nice. So we have Euro AUD EA on the daily time frame. And what it has done is it came down, dropped into this entry zone, and has found support there. So let's look at it quick. Let's look at that quick. Euro AUD, where do we got it? We ain't even got it here. Let's bring it out. Boom. Oh, it's not. And I always choose FXM or ACAP, Vantage. In this case, we will choose Vantage Broker, because that's the one we use. That's the one we recommend also. If you guys don't have the link, let us know, and the link will be posted. Okay, so Manara is telling us there's a buy opportunity for EA. This is EA, Euro Australian dollar. Now, let's see if we agree with that. We have a perfect reversal. You guys see it? I pulled Fibonacci from this bottom to this top, and the market came down, chopped around a little bit at the 28 I just say the demand zone at this case, because you guys should know by now what it is. The 28.6 retracement to the 88.6 retracement, that's the demand zone. If we flip it, then that's the supply zone. All right. So there's a lot of demand here. If we flip it, if it's a sell, then there's a lot of supply out there. Now, market came down, tested the 127.2 Fibonacci extension as support, and it worked very well, as you guys can see. We got support. Let's go to the lower time frame. We have broken through the resistance of the 20-day moving average and open a new candle above. Let's go to the 50-minute, and we're showing a lot of strength here. This market wants to go up. We have a definite buy here. I see a definite buy here. Manara tells us, the indicators tells us, Fibonacci tells us, this is a buy. So let's just look for entry. What's a good opportunity to enter? I'm going to take one last look at this. Yeah. Okay, guys, I jumped the gun. So we have one last level to crack before we can enter this. And that is the 38.2 retracement. We came from above. Look. So I pulled this Fibonacci from this bottom at the daily time frame to the top here at the daily time frame. And what we quickly can see then is that market came down to the 38.2 retracement here, right? And broke through the 200-day moving average. This is the 200-day moving average. So broke through, and it's retesting it from below now. This is on the daily time frame. So that's where the resistance is. This is the line I'm talking about. So before we enter this market, this is how the buy will look like. I see this thing clearly now. This is how the buy will look like. Boom. Retest of this zone, clear above the 20-day moving average. We'll put it right above this 38.2 retracement, and the entry will be something like this. Something like this. This is something how this trade will look like. Now, I would set several. Actually, we'll put this one lower. We'll put it just beneath. Because what I think is the market will come up to the sweet spot, so I'm gonna do its thing. Now, this is what we see. So now we're looking for the market to do this. Come above the zone and show that it has flipped this as support. When it does that, confluently, it will also do the same thing on the daily time frame with this 200-day moving average. You guys see? So we want to see the market on top here, right? That's when we have our entry. This is our entry for the buy. So, with that said, and you see it's also perfectly confluent with this 200-day moving average. We'll flip that one on top. So this is a nice trade that I see, but we need to let the market come to us, do its thing, and to do that we have to wait, be patient, as I said before. So that's what we're doing now, and we can set this trade out. We will put the first take profit just below the 100% retracement here. Sorry guys, wait 1 second. Let me see one thing. Not bad. Let me do this instead. That is the flip. And we want to be correct with the take profit levels. Okay, so entry. Yeah. All right. So entry here at about 1.533. Then we got the first take profit at just below this line. So that will put it at 1.5375. Next take profit would be at around 1.5448. And the last take profit, I will put it here at 1.5498. That's it. Stop loss. And stop loss, we put it. Let's take a better look at this. I will put quite. Oh, so. I will put a quite tight stop loss. I will put the stop loss at. To explain what I'm looking at for the stop loss. So most people, when they put the stop loss, they want to see like, okay, the last wicks, the last candles, where did it end? So they put the stop loss like right below this. That's the easy way to put it. Now, the thing is, you can have a tighter or a bigger stop loss, depending on some other factors. And the factor I'm looking at, first and foremost, I'm looking at this little bottom of the swing here that's going on right now. And also I'm looking at the 20-day moving average on the 50-minute time frame. So I want to be below that. So I'll put the stop loss here somewhere. And then we have a trade with 1-to-4 ratio, even more, almost 1-to-4 ratio. That's really good. More than 1-to-4. That's really good. So stop loss is at 1.529. 1.5298. 1.5298. And market is moving to our entry zone. It's moving, it's getting closer. Let's see if it does what we want it to do. Yeah, and that's the Euro D, the Euro AUD, so the EA. Let's remove these. Let's remove these. This one, let's see. Liquid GBP USD, we got that one set up. This is the Euro USD, Euro AUD. And with that said, I think, wait 1 second. I cannot finish the stream without looking at gold and Bitcoin, right? Okay, let's start with Bitcoin. What do we have with Bitcoin? Bitcoin is, you can remove these all drawings. That trade is over. Took our 2 take profits, 700 pips. That was a very successful trade, but it's done now. So what we see with Bitcoin is just basically on a 4-hourly time frame, it's just testing this 20-day moving average as support right now, and we will see if it holds. It's been ranging a lot in this area here, so you guys see. The market has just been ranging inside here, and was trying to break out, but didn't happen. Was trying to break out, didn't happen. So we got a lot of wicks to both sides, but no real breakouts. So now basically what needs to happen is if this one is going to go for a sell, which I think it's going to do, I think this Bitcoin is going to drop, then it needs to first break this 20-day moving average on the 4-hourly time frame, and you need to go below the sweet spot zone that we see here, where it's kind of stuck, and that's basically it. Yeah, you see, even on the hourly time frame, it's respecting the 20-day moving average. So that's basically it. So we're looking for Bitcoin to break basically this whole zone, nice and clearly break it, and that will put us in a sell position for Bitcoin. Now let's take a last quick look on gold. What is happening with gold? Gold dropped a lot. How much has it dropped? Not so much. All right, so gold right now, well, gold right now is, like you guys see, it's been moving up such power. Like this whole sequence here is phenomenal. Yeah, it's testing a lot of support here right now. So what I think is up for gold right now is that we got to see if this 20-day moving average holds, because as you guys see, it's been working as support ever since we got on this run. It's been working as support. Yeah, of course, sometimes we got below it on the hourly time frame, but we never really like even when we got below it, if we look at that, we went below and we came right back. So like when the retest was supposed to happen, it didn't happen. It just broke right back above again. So that's basically what we're looking at here, right now as well. We're looking for gold to hold this level. If it holds this level, breaks above, not only 20-day moving average, but also the 200-day moving average on the 50-minute time frame, and we got potential buy here. But gold is volatile. Gold moves quickly, so there's also scalp opportunity here. What is scalp? Scalp is a small trade, not so many pips. And that scalp would be like basically this trade here. From breaking above this yellow line, which is the 20-day moving average, to the bottom of the 200-day moving average, all on the 50-minute time frame. which this would confluently go with the resistance that we see here. Now, would I take this trade? Maybe. Not very sure yet. I'm looking at this. Yeah, maybe. To take this trade, first and foremost, what I want to see is this 50-minute time frame, 50-minute candle close above 20-day moving average. If it closes and the next candle that comes retests this 20-day moving average, I might consider an entry. So I'm gonna keep my eyes open for this. I'm gonna look out for this, and if I see something, I call it out in the prosperous signal channel. In the meantime, before I say goodbye, just a quick look at GBP with USD, because I see it doing some stuff. On the 50-minute time frame, we see it's trying to break above this resistance that we got here. So as I said before, we want to see it break above both of these. What has happened is it came down, tested the support here. As you guys see, I even put in a potential entry here, and then it went up. Now, we didn't enter the market. I was watching this all the time, but we didn't enter the market for a reason. And that is because we didn't get a clear confirmation that the market actually is going to go up from here, or if it's going to break through, retest, and go down. So what might happen now is we're coming up to this 20-day moving average, and then we see the market coming down again. That's why we got to be patient with this, and we ain't doing nothing yet. So this one too. So the gold and the GBP USD, I'm keeping my eyes open for those. For potential trades there that might activate very soon. And then we had the Euro AUD that we're looking for a potential trade if it breaks above and shows nice support at the 38.2 Fibonacci retracement. So we got three potential trades. Let's stick with that and settle for now. Guys, thanks for watching. Have a nice day. Stay blessed, stay prosperous. I'll see you guys very soon again. I'll see you guys on Monday again, because I ain't streaming until Monday. So weekends may be something, if we see something on the crypto side. Markets are closed. So I see you guys on Monday again. And with that said, stay blessed. Boom.